What if the financial security you believe you have is just an illusion? Yes, you heard it right. The concept of financial security is often perceived as keeping one's hard-earned money in a traditional bank savings account. It's a tried and true method. After all, one's money is safe, right? But is it really as secure as we think? Let's dive into this a bit more. The traditional bank savings account, while providing a sense of safety, comes with its own set of drawbacks. One of the most glaring is the painfully low interest rates. These rates are often not enough to combat the eroding effects of inflation. So, while you might feel that your money is safe, in reality, its value is gradually diminishing. This is where the notion of inflation comes into play. Inflation, in simple terms, is the rate at which the general level of prices for goods and services is rising. As inflation rises, every pound you have stored in your savings account is worth a little less each day. So the question becomes, is your money really growing in a savings account? Or is it just maintaining a slow crawl while the value of each pound shrinks? Now let's introduce a new player in the game: assets. When we talk about assets, we refer to items of value that one owns. This could be anything from real estate, stocks, bonds, to precious metals like gold. Assets have the potential to not just maintain their value, but to grow it over time. They can potentially outperform the meager returns from a savings account, providing a more effective shield against inflation. So, what we're looking at here is a shift in perspective. Instead of viewing a savings account as the epitome of financial security, it's time to consider the power of assets. The question then arises, are there safer and more profitable options than a traditional bank savings account? Spoiler alert, there are. Stay tuned as we delve deeper into the power of assets in the next segment. Enter the world of assets, a world where your money works harder for you. Assets, quite simply, are things that put money into your pocket. They are the cornerstone of wealth and financial security. You see, assets come in many shapes and sizes, each with its own unique ability to generate income. Consider real estate, for example. A property can be rented out to create a steady stream of income. Over time, the property's value may also increase, providing the owner with a potential profit upon sale. That's two sources of income from a single asset. Now let's talk about stocks. When you buy a share of a company, you essentially become a part owner of that business. As the company grows and prospers, so does your investment. You may receive dividends, which are a portion of the company's profits distributed to shareholders. Plus, the value of your shares can rise, offering the possibility of capital gains when you decide to sell. Bonds are another type of asset. When you purchase a bond, you're essentially lending money to a corporation or government entity. In return, they agree to pay you interest over a fixed period and return your initial investment at the end of that term. They offer a predictable income stream and are often considered lower risk than stocks. In contrast, traditional bank savings usually offer a modest interest rate. While they're safe and reliable, their growth potential is limited. Over the long term, the returns from assets like real estate, stocks and bonds can significantly outpace the interest earned from a bank savings account. In the world of finance, the adage, "money makes money," rings true. By investing in assets, your money is not just sitting idle, it's actively generating more money. It's like having a team of diligent workers tirelessly toiling away to increase your wealth. But you may be wondering, how exactly do these assets outperform bank savings? Let's delve deeper. To truly understand the power of assets, let's look at some real-life examples. Picture this, a man named John living in the heart of London. In the early 90s, John decided to invest in real estate. He bought a small apartment in a then not-so-fashionable part of town. Fast forward to today, that same neighborhood is now one of the most sought-after areas in the city. John's property, which he bought for a mere five-figure sum, is now valued at a staggering seven figures. That's the power of assets. Now, let's cross the Atlantic and land in New York City. Meet Sarah, a savvy stock market investor. Back in 2009, amidst the global financial crisis, while others were panicking, Sarah saw opportunity. She decided to buy shares in a then-struggling tech startup. Today, that startup is one of the giants in the tech industry, and Sarah's investment has multiplied many times over. But it's not just about real estate and stocks. Let's travel to the vineyards of France, where a man named Pierre has been collecting wine for decades. Pierre's collection, which started as a hobby, is now worth a small fortune. Some of the bottles in his cellar are so rare, they're worth more than gold by weight. And let's not forget about the world of art. There's Maria, an art lover from Italy. Over the years, Maria has collected works of art from emerging artists. Today, some of those artists have made it big, and the value of Maria's collection has skyrocketed. These are just a few examples of how assets can grow in value over time. But it's not just about the potential for high returns. It's also about diversification. By investing in a variety of assets, you can spread your risk. If one asset class performs poorly, others may do well. This is a key strategy in wealth management. Of course, it's important to remember that investing in assets involves risks. Market conditions can change, and the value of assets can go down as well as up. But with careful planning, thorough research, and a long-term perspective, the potential rewards can be significant. So, whether it's real estate in London, stocks in New York, wine in France, or art in Italy, the power of assets is clear. They offer the potential for growth, income, and diversification. And they can provide a level of financial security that a traditional savings account simply can't match. These examples show that with the right knowledge and strategy, assets can significantly outperform a savings account. But what makes assets safer? You might be thinking, sure, assets can bring higher returns, but aren't they riskier? The answer might surprise you. Assets, like any investment, do come with a level of risk. However, it's important to remember that risk and reward often go hand in hand in the financial world. The potential for higher returns often comes with a higher level of risk. But that doesn't mean assets are a dangerous game of chance. In fact, there are strategies to mitigate these risks. One of these is diversification, spreading your investments across various assets to avoid putting all your eggs in one basket. This way, if one asset underperforms, others may do well, balancing out your overall portfolio. Another strategy is long-term investing. It's a well-known fact that markets fluctuate. But over the long term, the general trend of most asset classes is upward. This means that even if your assets dip in value in the short term, they're likely to recover and even grow over the long term. Now let's compare this to the risk of keeping all your money in a savings account. Sure, your money is safe in the sense that it's not going anywhere. But there's a hidden risk here: inflation. Over time, the value of your money decreases due to inflation. So while your bank balance might be staying the same, your purchasing power is slowly eroding. In other words, your money is losing value while it sits in a savings account. This is a guaranteed loss, whereas with assets, there's the potential for growth. So when you weigh the risks and rewards, assets can actually be a safer option than cash. They offer the potential for growth, and with smart strategies like diversification and long-term investing, you can mitigate the risks. Assets aren't just about chasing higher returns, they're also about protecting your wealth from the silent thief that is inflation. So not only can assets outperform traditional savings, but they can also be a safer option when managed correctly. So, what's the takeaway from all of this? We've journeyed through the illusion of financial security to the power of assets, and seen real-life examples of how assets can outperform traditional bank savings. We've discovered that, contrary to common belief, assets can indeed be safer than cash. The key here is understanding that assets, whether they be stocks, real estate, or even intellectual property, can offer a level of protection against inflation and economic downturns that cash simply can't provide. Moreover, they have the potential to bring in profits that far exceed the modest interest rates offered by traditional bank savings. It's crucial to continue learning about the different types of assets out there and how to invest wisely in them. Remember, it's not about quick wins, but building long-term wealth and financial security. Remember, your financial security is not an illusion. It's a reality that you can achieve with the right knowledge and strategies. So, are you ready to explore the world of assets?